Hello, and welcome to your Daily Five. I'm Greg Harmon, President and founder of Dragonfly Capital Management. At Dragonfly Capital, we manage money for clients in separately managed accounts using technical analysis and options strategies to minimize capital at risk and exceed the performance of benchmark indexes like the S&P 500. Find out more at dragonflycap.com. If you are one of those do-it-yourselfers, though, that want to figure out how to manage your own money, we also offer a newsletter that gives some analysis on a weekly basis of the market, trade ideas with triggers, stops, and targets, and how to adjust for risk management for those that like to take control of their own life and take control of their own money. That's also available through dragonflycap.com. Today, I want to talk about a situation that's been going on for a little bit, but is really starting to take hold now. And I'm labeling it oil stocks are gushing higher. So our first stock today is a mid-cap, Marathon Oil. And Marathon Oil, you can see, had a peak back in November as markets were starting to move higher, and the oil had peaked at that time. With oil falling off and then coming back, Marathon now has started to break out of this kind of a you might call it a cup and handle that's going on here, but a pullback from resistance back to resistance, and then a breakout. This chart is as of Friday's close. Clearly a move higher here, clearly a move back over the flat 200-day moving average with strong momentum, with the RSI being up near the overbought signal, and with the reset that happened recently in the MACD starting to reverse itself back higher again as well. $16 billion market cap company, doing quite well, and starting to look like it might go and retest towards the highs from November. Second name is ConocoPhillips. This was on our recommendation list this week as a possible trade candidate. You can see it's got a similar type pattern, falling off from a February top down to a March low, and then kind of rebuilding after some consolidation and jugging back higher. A little bit of a cup and handle here as well. Here's the cup, here's the handle, and working towards a breakout level. Like this one over 118. Also has strong momentum, been over the 200-day moving average for about 3 weeks now. Has that same kind of pattern on the MACD here with the reset lower, but staying in the positive territory and moving towards a positive resolution, with the RSI moving higher as well. This one a little bit bigger. This is a $55 billion company. Sorry, $138 billion company. So it's one of those mega caps that is something that you can attach your portfolio to and start chugging along. Moving backwards a bit in the market cap space, Occidental Petroleum. This one has been a favorite for Warren Buffett. You can see the support level here from May of last year, where Mr. Buffett has been actively buying as it gets close to that range. You can see all the activity that's happened in here between 57 and 59. Finally moving back up out of that range and starting to test resistance that has been in place for almost the entire year now. With strong momentum, moving higher on the RSI, as well as solid growth in the MACD in a positive sense, and still got a lot of room before we get to these peaks that we saw back here in 2022. So this one, strong mover, good view on the Bollinger Bands here, pointing higher as well. Also over the 200-day moving average, a good one to add to your portfolio. If Warren likes it, it can't be all bad, right? Next, Chevron, ticker CVX. Here's one that has not broken out yet, but is starting to look like it's in that range. We've got the double top here from November and January, pulling back to a low in March, lower high, and then some consolidation in here. And now we're starting to retest resistance here just under the 200-day moving average. A move here over that 200-day moving average and over this resistance looks like a good buy signal. So we're talking about about 165 on that. Momentum is picking up. It's been positive for a while and it's starting to pick up now. And we also have the MACD starting to roll up higher as well and in positive territory. You got the bottom of the Bollinger Band starting to float up as it rounds out of this bottoming pattern. So this might be one of the more promising ones should the oil rally continue, in that it's got had the least movement so far. It's also a very large cap company at over 300 billion market cap. So it's one of those that you would expect it takes a little extra time to turn the battleship. Finally, we've got Exxon Mobil. Little known fact, my mom worked for them modeling sludge flows back in the 90s as a computer programmer. You can see here that Exxon has been a bit more stable towards the highs over 2023 with the peak in February and then again in April. This is the all-time high here in April. A pullback here into consolidation range, a little bit below the 200-day moving average and around it. And now we've got the confluence of the moving averages moving in together with the price of the stock moving higher along the open Bollinger Bands. It broke out last week above this short-term resistance that's been in place since May. And is now ready to start attacking this consolidation zone that happened during April and head towards its all-time high around 118 again. We've got strong momentum here as well with the RSI creeping up towards the overbought signal, but still with some room there. And we've got, to show that there's room on the MACD here, we've got a rising MACD, positive territory, but still well below the peaks from April and November of last year. So we've got positive momentum reinforcing positive price movements in the oil space here. So Marathon Oil, Occidental Petroleum, ConocoPhillips, Chevron, and Exxon. I could have added 8 or 9 other names to this list. The oil sector looks really great. It is truly gushing higher. That's my daily 5. Thanks for watching.